All right, ladies and gentlemen, welcome into another market and trade review video. And this one is going to be a little bit different. Just like the title says, we're going to be looking at where we would put $10,000 right now. And we are resetting the paper account that we took. And last year, if you've been following, or this year, the beginning of this year, if you've been following, we took a paper account from $30,000 to $216,000. And that was from January 1 to March 1st, which was last Friday. We got rid of that and reset it back to $10,000. And if you want more proof, here it is. That's the paper account. I mean, what is proof, right? It's a paper account, it's not a real account, but we did treat it like it was a real account in our entries and exits, our risk management, and the way that we followed our strategies on all of our trades. So now the question is, where would we put $10,000 right now, right? What stocks we're gonna be watching to do that? And if you're new here, go ahead and hit that like and subscribe. Appreciate all the love I've been getting on the channel from all you guys. Means the most to me. And if you don't know, in the description of each of these videos, my latest video on the channel, there is a link for free stock. You go ahead and click on that link and sign up for Webull, which is the trading platform that we use to trade on here. And if you do that, you get free shares of stock. You can get up to $3,000 worth of free shares. All you have to do is sign up, download Webull, open a brokerage, and deposit as little as $5, $1, $5, any amount, and you'll get that free stock. So let's take a look at it. What would we do with this $10,000 right now, right? I have rearranged the watch lists a little bit. I've also increased the font size and things on here so you guys can see it a little bit better, hopefully, in a lot of these videos. So obviously, right, if I'm going to be putting $10,000 in and trading $10,000. If you guys don't know, I trade options. That's my bread and butter. The SPY is my bread and butter for trading options. On that last account that we took from 30,000 to 216,000, probably I would say 60 to 70% of the trades on that were SPY 0 to 3 DTE options, and that is a great way to practice learning supports, resistances, and trends, patterns, how to read candlesticks, because the SPY is a very liquid stock, right? It moves a lot. There's a lot of opportunity for exchange to happen in the marketplace on the SPY. And the SPY is an ETF, and that is like a basket of stocks you can think of for the S&P 500, which is one of the main big three that are recognized on Wall Street, and that's the Dow Jones, the NASDAQ Composite, and the S&P 500. And the SPY is like a mini version of the S&P 500 ETF. So that is what I trade, right? So obviously I'm going to be day trading options on the SPY, QQQ, Apple and Microsoft, Amazon, Meta, Netflix, Google, Nvidia, AMD, right? MicroStrategy and Coinbase, the big names that are moving really fast. In the recent months, right? I'm going to be looking at those, of course. But that aside, right? $10,000, where would I put it in some longer term? I'm going to buy weeklies, or just like let it sit there, right? Let the money sit there and let the stock grow. What am I going to be looking at? And this is in no particular order, but here is what I have been looking at for those case scenarios. The first one that I am going to be looking at is Carvana. Carvana, if you haven't seen it, right, they will bring your car to you. It's like ordering your car online, and they'll ship it to you. Carvana looked like it was going to fail, and they were all the way trading at almost $400 a share, and they were down at $355, and they have been making an incredible comeback. The earnings have been surprising everybody and have been gapping up just about every earnings play. Last 1, 2, 3, 4 earnings in a row. They have broken above this blue line, which is the 200 EMA. That is the estimated moving average, which we don't live by the EMAs, but they're not gospel, but they are really good indicators. They have also broken. It is also broken above this support right in here, right, which was at about 64, 65 that could not break multiple times. And it also has an insane amount of short interest. So Carvana is one of the ones that I'll be watching as we take this $10,000 to as high as we decide to. The next one is going to be SoFi. Now SoFi, no one really knows what SoFi does. No, not really. SoFi, you can read the profile here, right? They're a lending service. They use AI to help with their lending programs. But we are paying attention more to the technicals, more to the flow, and what the overall market consensus is on a name like SoFi, right? So a lot of big companies like ARK Invest have been loading SoFi, and it is closing on the weekly and forming this pendant in just this tightening range little by little. And we are starting to set what are called higher lows, right? So when it goes back down, it's higher than last time it dropped down. So higher low here, another higher low here. And now we need to have higher lows and higher highs. And as this pendant forms, we're gonna be looking for a breakout. Same thing, that EMA we talked about, right? The 200 EMA, and I use that really key. That's when big shifts in the market are happening, when that gets crossed and then held. So I tried to cross it here and couldn't do it. So we're looking for that to happen as well. SoFi. Tesla, a name that we all know. Love it or hate it, love it or hate Elon Musk. Tesla is a solid company, and they are more than a car company, right? They're a tech company. And they're doing a lot of other stuff with robotics and machine learning rather than just cars, right? Tesla has come down and put in a beautiful inverse head and shoulders pattern right in here, which is that blue line that we've traced out, and now is following this trend up and holding very nicely. We are getting an EMA cross right here, and Tesla's not going anywhere, right? It's a solid company. I believe that it is undervalued right now at $200 a share and should be priced at a much higher price point. It has been as high as $400 a share in the past. That's pre-split. Another one that I'm going to be looking at, excuse me, is JFrog, right? And JFrog, this company I've had on watch for a long time. Have not traded them in a long time. Used to short JFrog on their way down. Now this is a company that has crossed above the 200 EMA, right? We're seeing a similar pattern. The EMA crosses, and that's big, right? Names that have been consolidating for a long time, and they're breaking above these shelves of consolidation out of this kind of bowl. And we did see this bowl, B-O-W-L, not B-U-L-L, like the one behind me. Oh, right there. We're breaking above that, and then we flagged for a little bit, and then broke up with strength, and we had some good earnings come out from JFrog. And we took a good look at their financials, right? Their balance sheet and their income statement. And those look very good as well. Square. This is an interesting name. Where, as you can see from Square, right, we have tried multiple times here to break above this level in here of about $80. We've done it a couple times in the 95s, 90s, and we come right back down and we can't quite get above it. So if we can get above and back into the $100 range on Square, there's a long way to go. And Square, a lot of you probably use this every single day and you just don't know it, right? Square, they are a company that when you swipe your credit card, that's who it is. Whoops, let's look at the profile, right? So it says creating ecosystems for distinct customer audiences. So they use Cash App and then Square. So when you have people that plug in the little thing into their phone, you swipe their card on it, right? And the headphone jack, that's Square in a lot of places. Or the iPad that gets flipped around for you to sign and give that annoying tip at a restaurant, Square. So they get you, right? It's a payment processing platform and helps build that ecosystem. And I like Square. They had a really good earnings report and are gonna keep going in my opinion, right? Again, none of this is financial advice, just all my opinion. Now, looking at AI, this one, we're gonna go ahead and hide the supports and resistances here from intraday trading when AI was moving big time. AI has had a big bounce up, and on the daily chart, right, is showing really strong support down here in this $20 to $23 range right in here. And it has tested it multiple times and now is breaking above with a little bit of a gap, and we're looking for it to get into the 40s and above 50. And once we get above 50, we have a long ways to go. Again, it is a break above the 200 EMA, which has been pretty flat as AI has been consolidating for some time. The next name on the list, funny enough, is Robinhood, right? Which has been also consolidating for a long time, has a lot of room to run. It's coming up to test the 200 EMA on the weekly, which is this light blue line in here, right? They've had great earnings, and one of the big reasons why we like Robinhood right now is because of the amount of Bitcoin that they have on their balance sheet. Another reason is because they are offering serious incentives for people to transfer over their Roth accounts, right, Roth IRAs to Robinhood, and they're offering really good interest rates for people to hold their savings in Robinhood. So that is a few of the reasons why we're watching Robinhood. We also like the technicals, right? Beautiful bull flag here on Robinhood. Mara, I had to throw a Bitcoin name in there Robinhood gives us a little bit of Bitcoin exposure, but Mara really gives us Bitcoin exposure. Bitcoin itself, if you haven't been following, right, has been on an absolute tear, and we keep putting in new all-time highs every week. No, sorry, not new all-time highs, new weekly highs, new 52-week highs. So Marathon Digital Holdings, they have to do with mining of cryptocurrencies, right? So as Bitcoin moves up, so does Marathon. And it has a lot of room to go, just like Robinhood. It had traded all the way in the 80s and even higher when it first released. And that is a little bit inflated in my opinion. And that's when it first came out and Bitcoin was really going crazy all the way back in 2012. And although Bitcoin wasn't as high as we've seen it, it was very volatile back at that time. So Marathon went as well. So we're going to be watching that to be moving up here. And while they did have bad earnings, they recovered nicely, wicking off these EMAs, and they're going from there. The next name I have on watch is DraftKings. DraftKings, everybody thought this company might fail. They went all the way from $75 a share down to about $9 a share, and they are on the comeback train. And we can go ahead and turn on this beautiful channel here that we have, and we're coming up to test this resistance point up in here, this zone that we traded in for a long time back in here, and we came up and kind of wicked off of it, and then we sold off real strong, wicked off of this 9 EMA on the weekly, and then got bought right back up, a nice bullish engulfing candle. It didn't quite make it to the top, but it's going, and the bulls finished it, closed it strong here on the daily. We're starting to find this make this bowl, BOWL shape, and we're looking for a cup and handle, maybe test down to this 41.86 level and go from there. So those are the names that I will be watching. If there's some other names that you think that I should be watching, you want me to cover, go ahead and put it in the comments, and I would be happy to take a look at those, look at the charts and see, is it something that we should be watching? There were some honorable mentions. I had to look at my list really quick for different stocks, NTLA being one of them, Intellia Therapeutics. Same story of consolidation coming up to test. And this is a pharmaceutical and biotech stock, which right now I don't like to trade those too much. They're interesting to watch, but I don't watch them very often. Another honorable mention is Palo Alto, and this is thanks to Nancy Pelosi, right? Who we know is an incredible stock trader. It's not like she has insider information or anything, nudge, nudge, hint, hint. But we're watching Palo Alto as well because Nancy bought about $1 million worth of call options on Palo Alto. So that is where we would put $10,000 right now if we had to, if we just wanted to set it there and forget about it, if we wanted to invest in longer term weekly or monthly options. And so tomorrow when the market opens, I'm going to be taking a look at those stocks, looking at the Greeks and implied volatilities on some of the option contracts that are out in the future a little bit, and seeing what we can do to put this $10,000 and allocate it into some of those. Some of them we might hold off on, wait for some of these charts to play out a little bit better and wait for confirmation, all the while day trading the SPY and QQQ, as well as the other Magnificent Seven and fast moving tech names, SMCI, MicroStrategy, you name it. I appreciate you guys staying in for this video, coming in. Go ahead and hit that like and subscribe, share this with your friends. And remember, there's a link for free stock in the description of this video. If your goals and dreams don't scare you, they're probably not big enough. See you guys tomorrow.